Dalal Street reverses Monday's gains as US tariff worries resurface. India-Pakistan tensions also weigh. Sensex and Nifty end with minor cuts. Broader markets underperform.
Banks led by SBI and PNB are likely to file a review petition on Supreme Court's order scrapping JSW Steel's acquisition of Bhushan Power and Steel. IOB tells CNBC TV18 that all options are on the table and a final decision is likely in a few days.
Pharma stocks slip after US President Donald Trump signs an executive order to boost domestic production by asking the FDA to speed up approvals for local units and increase fee and inspections for foreign producers.
Ather Energy makes a subdued entry on the bourses, listing with a small premium. By the end of it, that premium also fizzled out. The offer price of 321 rupees per share. The EV maker remains confident of growing volumes, market share and margins in FY26.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. I am Prashant, with me, Suip. Suip, hi.
Hi, Prashant. I think the only place we saw green was in what I was wearing today, because we started quite okay in the morning. Global cues are very decent, and we'll run into the Fed announcement tomorrow. Yeah. But the colors suddenly changed, and there was no buy on dips. It was just a sell all the way kind of a day today.
I think it'll be interesting to see the total volumes traded today, because it looks like maybe it's a lower kind of a, if you compare it to the 30-day average, etc. It'll be a lower volume day. We'll have to do that. The reason I'm saying that is because if you advanced decline was poor. For every stock which was up, there were 5 which were lower. But, 8, 9, 10 names on the downside which had volumes. That's it. Otherwise, lesser traded names, not very well owned. So there wasn't very much by way of volume on the downside. Not that there was huge volume on the upside as well. So I think, a bit of a stay away kind of a session maybe. Not so much in terms of determined selling which is going on or anything of that sort. So maybe indifference more than anything else, if you want to use a word to describe what really happened. And we kind of drifted lower throughout the day. Where there was, I think, determined kind of action was, individual stocks. And lots of them came. And, we've got what? I think about less than 200, around 200 earnings so far in this earnings season. This is, of course, a longer earnings season. And my guess is, and again, we'll look this up over the next couple of days, disappointments, I think, exceed beats. And this, of course, even as expectations were running pretty low. So even on low expectations, I would say, generally what we are seeing so far, the color is quite negative and on the red side. Surbhi.
Yeah, absolutely. And this sort of risk-off sentiment continued to play out today, particularly in the broader market. And this mock drill, the nationwide mock drill that the market is sort of awaiting, that continued to be a chatter point in dealing rooms as well. And we saw that play out. And that was one part of it, why there was a general sense of risk off, get on the sidelines, take some profits. And the other was some earnings disappointment. Case in point being, say, stocks like Bank of Baroda or even a CG Power, even Indian hotels where the numbers seemed to be okay. The market was just in a complete risk-off mode. By the end of it, the PSU banking index ended down with a cut of almost 5%. So it wasn't just BOB. A lot of other stocks, plus the continuing overhang from SBI's numbers and commentary yesterday, that kind of led to the sharp drop on the PSU banking index. So overall, a fairly cautious day for the market. Let's go on. Lots to cover over the next 20 minutes. Lots of developments to track as well. We'll, of course, kick off by, looking at the blow-by-blow account in terms of individual stocks, all the movers and shakers coming up with Vivek. Some of the stocks in focus today's listing, of course, Ather Energy, Polycab and JSW Steel. We'll talk about all these stocks, why they were buzzing today. And then, of course, dive into the key events to watch, the key results to watch tomorrow as well. But first up, Vivek, over to you. Down day today.
Absolutely right. More declines than advances, like you put. And overall, advance decline ratio was quite weak. But quite a few stocks on the radar. Let's start off the list of gainers first. Polycab, the CNW pack or the cable and wired companies have actually done quite well. KEI was a very good set of results. Polycab to join the list. Good set of numbers. FMEG segment actually saw a bit break even. First profitable quarter for that particular segment after almost 10 quarters. Our stock ended higher by over 2%. Godrej Agrovet was the other stock in focus. brokers, a Kotak Institutional Equity upgrade coming in. They believe that the recent sell-off was slightly unwarranted, and stock ended higher by over 3.5%. One stock, from the coffee-producing pack, that is CCL Products, up. Very strong margin expansion. Street clearly like that, over 300 basis points margin expansion, 16% higher from the broader markets for CCL Products. And Tattva Chintan Pharma, although the results were quite muted, very good management commentary in the conference call. Also an order win coming in, something that the street liked, over 4% higher for Tattva Chintan. On the other hand, a list of negative stocks, the entire pharma pack on the back of the executive order that was put up on the White House website. You actually saw the entire pack reeling under quite a bit of pressure. Aurobindo Pharma almost 3% lower there. Bank of Baroda came out with results during market hours. PPOP miss. Abhishek tells us NIMS at a 14-quarter low. Stock ended lower by over 10%. CG Power, again, slight miss to what the analysts were estimating. In this particular name, stocks saw very sharp sell-off in the last hour, over 6% lower. And lastly, Indian Hotels, good set of numbers, but profit booking coming in after that set of numbers, over 6% lower even for Indian Hotels in trade today.
Okay, all right, got it. Vivek, thank you very much for that. Let's, quickly move on and talk about some of the key newsmakers of the day. We also have our guest joining in, Suip Bandyopadhyay of Inditrade Capital with us. Sudeep, first, just a very quick overall sense on, the market sell-off today. Do you read anything more into it? Is it just some profit-taking, some caution? Or are you taking a slightly different view now for the next couple of days or perhaps weeks?
Well, Subi, I think what we need to read is, the India-Pakistan geopolitical tension is making the local market bit nervous. Local investors and even, for that matter, FPIs are being a bit cautious. So some risk off the table is what they're doing. And I think this mood will persist if this tension continues. We are holding a mock drill after what? Almost more than 50 years. I think the last time it was when the Bangladesh war happened. So this is something which the investors are a little worried about. And that's why I think we did see the sell-off later in the day. And I think we may see more of it unless things cool down on the geopolitical front. Of course, we will also wait to see the Fed chair's commentary on US economy. And that will be very important for tomorrow.
No, absolutely. And I think something we'll pay attention to in terms of the commentary on Thursday morning. Ather Energy is the next one that we're going to talk about. Of course, listed today. It was a bad backdrop with the markets off. Stock, of course, was slightly higher at first when it listed, but then it sold off with the rest of the market. So Darshan is here with the listing, where valuations are now compared to other players, I should say, because there aren't that many pure EV players. But, and of course, the commentary from the management. So take it away.
So it was a muted listing by the second EV player, that is Ather Energy. On the board says that it has got listed today, and after the IPO, which had got subscribed 1.4 times. I remember it was the last day that company had managed to get its subscription entirely fully subscribed, and it was majorly led by retail and QIB. QIB subscription was around 1.7. It was a similar with retail as well. And if you talk about the outlook, company is saying that as of 9-month FY25, total volume growth that company had seen, that was in the range of 45%. But going forward, company is expecting that in FY26, volume growth would be much more than FY25. And this is going to be one of the important metrics which is going to lead profitability going forward. Also, talking about the store expansion, company is saying that it has been taking place rapidly, but focus majorly will be on distribution level going forward. And he has also talked about the capex heavy as well as the cash flows, and he said that current capacity is currently at 35,000 units, but at the same time, he's adding 2 or 3 more facilities, and gave an example of Aurangabad, where the phase 1 expansion is going on. And he said that once it's completed, there will be a major boost to capacity. But on the first day of the listing, after it got listed at the price of ₹328 per share against issue price of 321, it closed with a cut of more than 5%, almost 6% on the first day of the listing.
Oh, indeed it did. So quiet start for Ather. Thank you for that, Sudarshan. Let's talk about pharma stocks now. They were actually largely lower after US President Donald Trump signed an executive order to encourage US drug manufacturing. Ekta is here with more details. Ekta, this has been making the Indian pharma space quite nervous for weeks now. So what's the latest and how should we read it?
Well, yes, absolutely. Now, the executive order mainly focused on the fact that the US wants to increase domestic manufacturing. So they fast-tracked approvals for the US-based manufacturing plants. They've increased inspections and fees for foreign facilities. They've mandated public disclosure of API sources and public disclosure of non-compliant overseas plants as well. Now, overall, what analysts say about this entire thing is that it's not really a disincentive to overseas manufacturing. So it's not really intensifying, companies which are manufacturing in India. What they are trying to do is accelerating US-based approvals. The larger picture is the more concerning fact that they're looking to shift the balance of global pharma production. So you've already seen the likes of J&J, Roche, Eli Lilly, Novartis, all of them announcing investments in the US. In fact, all of them to the tune totally of around $100 billion plus. Now, again, the larger picture, which is probably going to play out in the next couple of weeks, is pharma tariffs could be announced in the next 2 weeks, specifically from the US government on pharma companies. And the US government is close to concluding Section 232 in terms of an investigation which examines the national security implications of importing drugs and APIs. So as of now, maybe companies which have a little bit of a base in the US could be probably a little more resilient eventually, such as Aurobindo, Cipla, Lupin, Glenmark. But one would have to really see how things play out at this point in time.
Okay, all right, got it, Ekta. Thank you very much for that. Let's quickly go back to Sudeep for a perspective. Sudeep, pharma stocks, are you buying any or are you totally staying away till there's clarity?
Well, I've been avoiding pharma stocks for quite some time. In fact, what I've been doing is I've been focusing on domestic pharma stocks. So, as mentioned earlier, I think in your program, Mankind Pharma has been my favorite, and I've been recommending that. Also, pharma companies having a significant domestic component can be looked at, and pharma companies having US manufacturing. So let's say Piramal Pharma has a huge facility in US. So if I have to buy a CDMO player, maybe Piramal Pharma would be my choice.
Okay, Piramal Pharma would be the choice there. Insurance is the next story that we want to highlight. The IRDAI, the insurance regulator, has proposed a major overhaul of the bank assurance model itself. This is all source-based information, CNBC TV18 exclusive. We put this out during market hours. Stocks did react. Yash is going to explain. Yash, over to you.
Well, Prashant, as per this particular proposal, which has gone from the insurance regulatory body to the finance ministry, it seems like it's a complete overhaul of how distribution of insurance channels through banks, that is bank assurance, really works. What has been proposed is essentially changing the whole commission-based bank assurance model to a transaction cost or a transaction fee model. What happens under commission-based model? I'll give you an example. If 100 rupees is the premium which the insurance company collects, 18 rupees is the commission which banks takes, to sell that particular policy. The cost to the policyholder is 118 rupees, under which 18 rupees is kept with the bank, and then 100 rupees goes to the insurance company. That is the commission-based model. Now, what the proposal seems to suggest is that a shifting to transaction fee-based model where nothing will be given from the insurance company to the bank, but the bank can put a transaction fee on the sale of every insurance policy to the policyholder itself. Now, this particular transaction fee won't have any limits on either sides, the lower side or the upper side, and it will be determined by market forces. This is as per the proposal submitted by the regulator. Now, let me just put a small caveat. This particular proposal went under the chairmanship of Debashish Panda as IRDAI chairman, but he retired about a month and a half ago. So we'll have to see how Finance Ministry really takes up this particular proposal. But there are various benefits which have been, put down by IRDAI along with this proposal. Like this will force insurers and banks to have more tie-ups, essentially giving customers or policyholders more varieties in terms of insurance policies. This could bring down insurance premiums, curb mis-selling, also reduce dependency of insurance companies on their parent banks, and have a more diversified mix itself.
Okay, all right, got that. Thank you very much, Yash, for the details there. So ever-evolving policy landscape for insurers. Let's see what eventually comes out on this bank assurance front. Speaking of financials, let's move to the other topics today. Banks led by SBI and PNB are likely to file a review petition on the Supreme Court's order, which had scrapped JSW Steel's acquisition of Bhushan Power and Steel. Meanwhile, Department of Financial Services Secretary has said that the government has already reviewed the order with all the lenders, and they've also taken a position and will approach the judgment based on that. That's not all. IOB CEO Ajay Kumar Srivastava told us that all options are on the table and a final decision on this potential review petition is likely in the next few days. Listen in to what he had to say.
Discussions are going on since the time the order came out, and the plan is yet to be finalized, and all the options are being discussed, and those options are on the table. Maybe in a couple of days the action plan will be finalized. But having said that, from IOB side, what I have to say is that the 760 crores we did get, and in the worst case scenario, even if we are supposed to refund it, I have to say that we are having sufficient cushion in the balance sheet, and this can be handled very efficiently without creating any adverse impact on the balance sheet.
Would you consider, Sudeep, JSW, would you look at it as a bit of an opportunity? It's down 6.5% after that news flow.
Well, I don't know as far as this entire scenario is concerned, because normally review petitions are very dicey. I don't know how this will get resolved. This is definitely a messy scenario. However, fundamentally, JSW does look good, and the correction has been already affected. So yes, if you are a bit of an aggressive investor, JSW Steel may be worth looking at current levels.
Okay, that's a call on JSW Steel coming in. By the way, Sudeep, we didn't ask you about today's listing, I think, Ather, right? I don't think we got your view there. Of course, today was the market environment and mood itself was off. But otherwise, what do you think of the company?
I think, very honestly, this is probably a better company than the other listed EV company, Ola Electric. They have the systems and processes in place. They have been growing in a much more systematic manner. May not be that aggressive, but I think it's a much more structured organization. So, if somebody has to bet for long term, this is probably a better bet on an electric vehicle business rather than Ola Electric. Of course, the valuation is rich. It is not cheap, and one needs to be very careful if you're taking a position. Current level, maybe we'll wait for some more correction here before we recommend a buy.
Okay. All right, got it. Sudeep, thank you very much for all the perspective today. You have a good rest of the evening. We'll take a short break, come back on the other side with the top corporate voices of the day along with the key events to watch. Welcome back. You're with us on Markets Forward. Let's talk to you about some of the key corporate commentary that we picked up today. Indian Hotels is eyeing a top-line growth of 12 to 15%. That's the word coming in from Mr. Puneet Chhatwal, the MD and CEO of the hotel chain. He adds that the company is expecting a 35 to 40% growth from newer brand properties in the current fiscal.
We are looking for anything which is between 12 to 15% top line growth, obviously very strongly driven by the Taj brand, and also a strong contribution, anything between 35 to 40% from the new businesses, which is Reimagined Ginger, the Tree of Life, Ama and Cumin.
Well, let's hear it from Sudhir Singh, CEO at Coforge as well, the best performing IT stock in this current environment.
FY26, we believe, is likely to be another exceptional year. We are extremely strongly poised. At this point in time, our 12-month signed order book is 47.7% higher than at the same time a year back. And you might have noticed that through the year, which was FY25, the total order book came in at $3.5 billion. We'd be very disappointed if all that we did in FY27 was just hit $2 billion. We believe we have a shot at doing slightly more than that.
All right, that was Coforge. Now to some more corporate voices. CAMS is guiding for early teens revenue growth in FY26. The company expects EBITDA margins to be in the range of 43 to 44% in the current year. Also guides that the non-MF revenue will be in the range of 17 to 18% by FY27. Next up on our list, OneSource Specialty. The management expects the margins of more than 40% from FY27 onwards. The company reaffirms its midterm guidance as well.
Okay, well, before we wrap, let's just quickly run you through some of the key events to watch out for as we come back tomorrow. Winnie standing by. Winnie.
Hi, so in terms of events on the global front, tomorrow evening we'll have the US Fed rate decision, so keep an eye out of that. Consumer credit will also be coming out in the US market, so that'll be important to watch out from data point of view from the United States. Eurozone, keep an eye out on the retail sales numbers that will be coming out for the company, so that'll for the country, so keep an eye out on that. China forex reserves data, that will be important from China front. Now, other than that, global earnings are also there that we are keeping an eye out on. The pharma company Novo Nordisk will be reporting their numbers, as well as Disney is also expected to report the numbers, so keep an eye out on that. Now, moving on to India, we have Q4 earnings coming in from Coal India and the Nifty 50. Other than that, other than Nifty 50 companies, we do have Blue Star that will be reporting numbers, Dabur, UBL, Route Mobile, Tata Chemicals, MRF, as well as Sapphire Foods, some of the other companies that will be set to report their numbers tomorrow, so we could see some bit of a move coming in for these companies. Corporate action, keep an eye out on Info Edge. There's a stock split of 1:5, so that's important. PNB board also will be meeting, other than their earnings, will also be meeting for a fundraising plan. So that is important to keep an eye out on. And other events, what we're keeping an eye out on, Vatican conclave is starting where they'll be electing the new Pope, as well as Ministry of Home Affairs has ordered a nationwide mock drill in India that will be beginning tomorrow. So keep an eye out on that.
All right, Vinny, thank you very much for that. So, I mean, that's a big one, right? And we'll, of course, get you updates on that starting tomorrow morning. It's a wrap on this edition of Markets Forward from Surabhi and me and the team that put this show together. Thank you for staying with us. More comes up in just a bit.